Welcome to an essential dive into a serious financial topic, the never-ending IRS audit and how you can protect your finances. Most people operate under a common misconception when it comes to IRS audits. Let's tackle that myth head-on. The common belief is that the IRS has only a limited window, usually 3, sometimes 6 years, to audit a tax return. After that, you think you're in the clear. But what if I told you that in certain specific situations, the IRS audit period never expires? That's the shocking reality we need to explore. To understand how this happens, we need to clarify the true role of the IRS. The IRS often presents itself as a neutral fact finder, but the reality is simple. It is, first and foremost, a revenue collection agency. And to collect that revenue, they can and will stretch the law to its limits, sometimes holding taxpayers responsible for mistakes or even fraud they didn't knowingly commit. A recent court case highlights this danger, showing how the IRS successfully argued that it had the authority to audit a tax return indefinitely. In this case, taxpayers filed their returns normally, relying on a professional tax preparer. Much later, the IRS discovered fraudulent entries made by the preparer. Even though the taxpayers were completely unaware of the fraud, the IRS issued a notice claiming they could reopen those old returns far beyond the standard 3-year audit window, arguing that fraud removes the statute of limitations entirely. This hinges on a specific section of the tax code under section 6501.1. If a tax return is false or fraudulent with the intent to evade tax, the IRS can assess tax at any time. This means no time limit, no expiration, and no protection based on how old the return is. Here's the real danger. Even a small adjustment on an old return can turn into a massive tax bill once interest and penalties accumulate over many years. So, how do you protect yourself from this devastating scenario, even if you trust your tax preparer? First, choose your accountant very carefully. The cheapest option can quickly become the most expensive mistake if they are sloppy or, worse, commit fraud. Second, always review your tax returns before signing and filing. You are ultimately responsible for what's submitted to the IRS. Third, ask questions when something on the return doesn't make sense. Don't be afraid to demand clarity from your tax professional. This case is a powerful reminder that vigilance is necessary when dealing with the IRS. Remember, the IRS is actively looking for revenue, and they will push legal boundaries to get it, even if it means reopening returns years later based on fraud you didn't know about. If you want to protect yourself and keep your books accurate, compliant, and audit ready, All Bookkeeping and Taxes is here to help. We handle everything, from catching up on past months and cleaning up messy books. We offer affordable monthly bookkeeping plans, ongoing tax filing, and consulting to help you maximize savings at a fraction of the cost. Visit All Bookkeeping and Taxes and get your finances in perfect order today.